All right, Truth Bomb community. Today's episode is a little bit different, a little special actually. I recently sat down with Michael Popok from Legal AF, one of the sharpest legal minds breaking down what's really happening at the intersection of law and politics. If you're not already following Legal AF, well, you should be because they just crossed 1 million subscribers, and for a good reason. They don't do spin. They just do substance. In this conversation, we connect the dots between economic reality, policy decisions, and the political forces shaping markets right now. No talking points, no fluff, just pure clarity. I hope you enjoy this special edition of my appearance on Legal AF. Now let's get into it.
Welcome to a special edition of Legal AF. Several times a week, I get to put my Wall Street hat on and talk about Trumponomics. They never call it Trumponomics because it's failing America, because most of America is crushed under debt, under high inflation, crushed under consumer confidence that's in the trash, and a GDP that looks like it's rolling back, job numbers that look terrible, and a president who's trying to gain control of not only his own fiscal policy, but the monetary policy of the Federal Reserve. At the same time, trying to get control over the statistics and the numbers that are generated by the government, that are relied upon by those who make decisions about our economy, and to find out how it's doing. And in addition, we have conflicts, at least the appearance of impropriety and an appearance of conflicts within the administration, who are making money hand over fist in things related to Donald Trump's policies. And we want to focus also on the Commerce Secretary, Howard Lutnick, and his quote unquote former family office, Cantor Fitzgerald, now run by his two sons, who just declared they had the best year ever, up 25%, and are making a shed load of money in not only cryptocurrency, but in AI. How did that happen? Why is that happening? And I got the perfect person to bounce this around with. New to Legal AF, Mark Malik. Not only is an old friend of mine, dating back to high school, if you can believe it, but he's also on YouTube himself doing work under Wall Street Truthbombs. He's the chief investment officer for Siebert Financial. Let's bring him in. How you doing, Mark?
I'm doing great, thanks.
Yeah, good to be back with you. So let's talk about the numbers. And let's talk about what the Federal Reserve at their meeting, I think it's on December 9 and 10, are going to do with interest rates, given the fact that during the shutdown, it appears that like the Bureau of Labor Statistics isn't able, how convenient for Donald Trump. They can't figure out household surveys because they didn't do any household surveys. So they can't really figure out the jobs numbers. And then we, you, me, and other stakeholders within the economy have to work around that. Why don't you give our audience some of your truth bombs?
Well, that is certainly an interesting truth. So it's funny that you bring up the Bureau of Labor Statistics. I mean, that has been, the numbers that they put out monthly are sort of the most important numbers for all of us to watch. And it's a long known challenge, those numbers, how those numbers are calculated, the statistical gymnastics that have to get done in order to make those estimates that we all hang our trades based on those. And of course, ultimately, how our portfolios perform is all based on these statistical gymnastics, these estimates. Then they're revised, as you alluded to earlier, later next year, like in March, they'll revise the numbers that we got this year. So it's very, very challenging to actually know what's actually going on in the economy. But what we do know, as you did say earlier, look, the labor market is definitely under pressure. There's no question about that. Anyone that questions that, I did read a recent comments by one of the hawkish Fed governors that the labor market's healthy. I'm not sure what numbers he was looking at, but certainly the numbers that we look at, even in the blackout, we had private numbers, right? So we got private numbers from ADP, which are pretty good numbers. And those numbers not looking too good. I mean, the labor market is definitely showing some signs that it's slowing down, which is a big concern, right? Because the labor market is a really good dictator of how well consumption, right? How well you and I as consumers, how comfortable we are. in making purchases, right? And so if we're worried about our jobs or we don't have jobs, even worse, we can't consume or we slow our consumption down. And we slow down consumption, well, consumption makes up 2/3 of GDP. And so that is not a good sign. So if you're looking for early signs of where the economy might be in 6 months from now, 12 months from now, you should be looking at the labor market. And we don't have that labor data. Whatever labor data we are getting is old, right? We got September's labor number this week. That's from September. I don't know what were you doing in September? I don't even remember September, right? It's November. And we just learned that we're not going to get October's number. Like we're not going to get it at all. It's not going to be late. We're just not going to get it. So when we look back in history, when we show our children history, this is what the labor market looked like in 2025. There's going to be a big hole in October. We're not even going to know.
So let's take the big hole now.
Yeah.
You've got the Bureau of Labor Statistics and even the former commissioner of the Bureau of Labor Statistics, she came out and said, it's not a conspiracy. It's just we couldn't do the household surveys during the shutdown. And so there's I don't think it was a conspiracy, but I think one of the reasons Donald Trump didn't care about reopening the government is because he also wanted to put more pressure on the Fed by putting them in a black box so they didn't know if they were flying upside down or not in order to make the decisions about the rate cuts. We all know Donald Trump wants cheap money. He'd love to have, as he said before, 2% interest rate. That's it. He wants money being fired out of a fire hose in order to wallpaper over the problems with his economy. And that may or may not be happening. My guess is that, based on what I'm reading, I want to hear what you have to say, is that the Federal Reserve, especially without the jobs numbers, there's not a majority to cut rates again. What do you think?
Well, interestingly, what we like to look at Fed funds futures and overnight swap rates, right, to get an idea of what the market's expecting. And if you just looked at Fed funds futures we can actually come up with a probability of a 25 basis point rate cut in December. And that number was near 100% up until the last Fed meeting, the FOMC meeting last month. And then when Chairman Powell, after the meeting, said, hey, look, it's not a given that we're going to be cutting rates in December, you saw obviously the market's reaction was very negative, but the probabilities went down significantly, somewhere in the 60s. From a Wall Street perspective, anything greater than 50% is considered, pretty likely, right? Because, a coin toss 50-50, but on Wall Street, 52% is a good probability. That number was in the 60s. So that was, most people were saying it was going to get done. But then as time went on, and as the Fed governors, the FOMC members got out in the talking circuit, they like to chatter a lot, the hawkish sentiment started to get turned up a little bit. And you saw that number come down. As of last Friday, it went below 50%. Right. Okay. And so if you ask me on the street, Mark, are they going to cut or not? I'd say, well, based on futures, what the market thinks, no. Based on some of the body language that I'm seeing, it's not a done deal at all. I think it is a coin toss. Interestingly, Michael.
By the way, just to interrupt, the missing job numbers is a factor of them not cutting the rates.
Well, sure. I mean, you're a Fed governor. You're at the helm of the largest, most powerful economy in the world, and you're making decisions that are going to impact the direction of that economy with no data, right? So that to me is like
you're flying blind.
Crazy.
You're literally flying blind.
You're absolutely flying blind. I've been saying that for a while. I mean, it's tough enough when they do have the numbers, right? Yeah. But now they don't have the numbers, and they're sort of in a challenge. I mean, they see inflation remain sticky. Okay, that's part of their dual mandate, and that is not coming down. That is definitely, you see goods inflation is increasing. Okay, it's not crazy, but it's definitely increasing. And we watch goods inflation for where those tariffs might show up, right? Because that's goods. We have service inflation, which has been kind of sticky. That is kind of coming down very, very slowly post-COVID.
What about supermarket inflation?
Well, that's the problem. Well, the problem, it's funny you bring up the biggest challenge, I think, what we're seeing now is not inflation as much as prices themselves, right?
Absolutely.
And so prices are just out of control. And so, yeah, you may see, remember, inflation is just a measure of where prices were last year to this year. But you can have inflation coming down and you could still see consumers starving, right? Because they can't afford to buy eggs or they can't afford to buy what they need every day. And we see plenty signs of that happening. I mean, we saw some of that this week. We had Walmart had earnings in this past week. And Walmart definitely talked about the bifurcation of the recovery, right? So they talked about their lower income customers struggling. Yeah. And so it's very hard, look, we all try to know what everyone's doing, but in the world that we're in, it's very hard for us to understand that there's a group of people in the economy right now that are not just struggling, but they're doing worse, right? That's the K-shaped recovery that we like to talk about.
And look at it from this perspective too, the cumulative impact of year after year after year of inflation. Things that first you had the big jump coming out of COVID, right? Because of logistical supply chain problems. So huge jump there. Yeah. Now add on to that 3%, 3%, 3%, 3%, right? Yeah. Compounding, if you will. Yeah. And now you're 5 years out, and the thing that cost you 85 cents is now $1 at the supermarket, right? To use but one example. So what I tell people is, for those that have enough money that this is not their issue, but still see it, there's a lot of people living check to check in America. And so when you went with your basket of goods, just the things you need, I'm not talking about the extra ding dongs or the Greek yogurt. I'm talking about the basic necessities that you need. And you go to the cash register, you are now, from where you were in 2020, you are now $15 short or so in your basket. And you think the supermarket's going to let you go to the parking lot with your cart or your buggy when you're $15 short? No. We have beef prices up 19%, coffee prices in double digits. I mean, and you got a president who's never missed a meal, who has the audacity to look the American people in the eye and say, things are going great. He's got a Biden problem. This is what Biden did to the American people. Yes, the numbers that you live in, Mark, show statistically, graphically, and numerically that they're going down. But the American people didn't feel that way. And even though Biden said, hey, inflation's heading down, everybody, give Kamala a chance. Yeah. That's not how Americans felt. And Trump has done the exact same thing.
Yeah, again, you hit it on the head. Look, we look at the numbers, right? And we see all these charts and graphs. But like I said, at the end of the day, it's about what people are paying for things, right? And that's what they're feeling. They're feeling that. They're seeing their incomes not rising as quickly as the prices of the things that they need every day. And where you do see it also, again, not to get too crazy and into the numbers, but this is the crazy stuff that, geeks like me tend to watch, right? When you look
You're
at
a geek in high school too, by the way.
Listen, hey, look, this bow tie this has been on for a long time. I wore this for my entire career, not the same one, but I'm a bow tie guy and I was a geek, you bet. And I'm proud. I wear it proudly. We look at like, again, Walmart. Again, the most everyone was talking about NVIDIA earnings last week, right? Because it's sexy and shiny, and they were talking about crypto, which we're going to talk about in a second. But Walmart, to me, was the most telling number, right? Because you want to hear what are people putting in their carts, right? And so what we're seeing, Michael, is that people that used to, remember, Walmart sells groceries and they sell dry goods. They sell toys, they sell baseball bats, television sets, and they sell groceries. So they have a good understanding of what people are buying, and what they witnessed, and they have been witnessing now for quite some time, is the shopping carts are shifting away from dry goods and more into groceries, right? Because people are like, well, I have to pay more, right? Beef 65% more than it was a few years ago, 65% more. Okay. And chicken and pork and everything. It doesn't matter whether you're eating filet mignon or eating chicken thighs, you're paying more for that. So that means they're buying less, baseball bats and less television sets and less clothing because they can't afford to buy the groceries. And you see that. And I think that it's very hard. Like I said, we don't see that in the numbers. You really have to dig to see that because, if you don't really look, you would think that things are doing well, right? Look, economy is growing. The economy is expected to do better next year. Stock market's growing, right? You have the wealth effect, right? That's a big thing, right? So if you look at who owns stock, right? It's not those people that you and I are talking about right now. Most of the stock is held in the top, let's say, 2 deciles of income earners, right? And they're getting wealthier because of the stock market, or feeling wealthier at least. They're getting wealthier because of home ownership. And home ownership has gone up for the higher income classes, and it's gone, by the way, down for the lower income classes. And so, if you look at these numbers, I don't want to say it's staggering, but I think that it's you really have to pay attention. You can't just make a, general statement, oh, economy is doing better. Prices are coming down.
I don't think the American voter thinks the economy is doing better.
Well, that's the thing. And that's the challenge. And, you mentioned in your, I was listening to another one of your programs where you were talking about the ratings, right? So you were talking about,
poll numbers,
Republican ratings and all those numbers. Yeah. So I look at something completely different. Now that we're in the nerdville here, if you don't mind, we had a great number last week. Well, not a great number. It's a, consumer sentiment number. Yeah. I love to watch those too, right? Because again, I'm obsessed with consumptions and the consumers. University of Michigan comes out with a sentiment number twice a month. They have a preliminary number and a final number. And the interesting thing about that number is that they break it up by political party. Okay. And so a lot of people argue that sentiment indicators, they don't give you a true picture because they're biased, right? Typically, when you have you would expect this if you have a Republican administration, Republicans on Capitol Hill, Republicans think things are great and Democrats think things suck, right? And then of course you have the independents, and I'll tell you about them in a second. But you can clearly see how these numbers cross over based on the administration. Okay. And so when I look at these sentiment numbers, okay. And by the way, on Friday, the University of Michigan came out with their final number, and the assessment of current conditions was the lowest since University of Michigan tallied those numbers, 1977. You and I were probably going to Seashore Day Camp at that time. Okay. But it's the lowest since they started. Okay. And that's current conditions. So that means people are very nervous about their jobs today, about inflation today. That's today. And of course, as I was saying earlier, I scroll down very, very quickly because I want to see what are the different political parties saying about the same thing. And so what you've seen is, let's just start. Look, we have a Republican administration. We have a Republican dominated Congress. And what you're seeing is you saw, of course, a higher sentiment number from Republicans, but what you're seeing is the trend, Michael, is down. In fact, significantly down in this reading, which is very eye-opening. Okay. So you expect Democrats to not be happy, right? Because their guy's not in the White, or their gal's not in the White House. And guess what? Independents also down. And I'm telling you, it was eye-opening. And it was like, wow, okay, even now Republicans are uncomfortable with the state of the economy. They're fearful about their jobs. They think their situation is worse than it was. They're fearful. They don't like, because they're asked about inflation. And these are things that I'm pretty sure the administration notices, right? They would be looking right at those numbers at this point. And so, I think, all of us need to get a much better pulse, on really what's going on in the economy, of where the bulk of the, well, you would say the voters, but what I would say the consumers are, right? But the bulk of consumers are really there. And we really need to know. And I don't think they're experiencing the same things as most of us. Certainly not the policymakers.
So let's move on to another, and end the last few minutes here on another truth bomb. We've got members of the administration, whether it's the Treasury Secretary, implementing policy that benefits his former colleagues at Soros in the Argentine bailout, or you've got a policy that's made to help out people who are connected with Saudi Arabia, like Steve Witkoff or Elon Musk now. And now you've got the reporting that the New York Times has come out with, not the first report. Wall Street Journal is also about to run a story about why is it that the Commerce Secretary's former company, run by his 30-year-old and 28-year-old sons, did so well over the last year, up 25%, which they've announced. And why are, at the very same time, they are getting into bed and into business with major AI infrastructure companies, is their daddy meeting with the very same companies on the taxpayer dime, using his power as the Commerce Secretary to effectively throw business to his former company. The administration wants you to believe that it's just the brilliance of Howard Lutnick's former company. And with full disclosure, I used to work at Cantor Fitzgerald. Okay. I left a number of years ago, but I do have eyes. I am a carbon-based human being. I can make observations about what is happening. And so we have the situation, front page New York Times today, about why is it that it's okay that Lutnick, the way that Trump has, is using his perch within the government to aggrandize for a family business, just as Trump does with the Trump Organization and his children and their investment in AI and cryptocurrency and in real estate around the world, which is reflected in domestic policy and foreign policy by Donald Trump. Same thing with the Commerce Secretary. We have policy that is made in a way and shaped in a way, my observation, that allows the stakeholders in his family to exploit the law or the policy that's been made and to make money. I want to hear your truth bomb on that.
Well, yeah, I will say that this has been questioned. This has been a question that has been bouncing around the street for some time. It's not something new. I saw the report, the New York Times report. First I have to say, all broker dealers who are in the space have had pretty much a banner year. Markets trading up really have helped them out a lot. I mean, the deal flow is much better than it was a couple of years back. So, just to say that, it's Cantor alone. Well, I'm sure there are things, but generally the industry is doing a little better. Okay. Now, what are they specifically doing over at Cantor Fitzgerald that might be slightly different? Yes, they are heavily involved in crypto. That's well known. It's challenging. It's a private company, so it's not like we can actually go and see, how much money they are making in crypto. Listen, as you say, I don't work for Cantor Fitzgerald, but I'm a carbon being, and I see things, and I know because look, you work on the street. I'm on the street. I'm active on the street, so I see the deals, and I know what deals that Cantor is working on, and they're working on some pretty big crypto deals. They're raising a heck of a lot of money right now. They're building some super fund now to make big investments, in the crypto ecosystem. They're working with Tether, with SoftBank, with a bunch of big names. So one might step back and say, look, I'm active in the space. I don't remember getting a call from SoftBank or from Tether asking me if I wanted to build a crypto investment, portfolio with them. But, look, how Wall Street works. People like proximity. There's no question that, Howie's firm is definitely, whether he's actively pushing business to them or not, but how Wall Street works, right? Everyone, would prefer to work with somebody that has that, that possible in. I mean, look, the administration has certainly, pulled away some chocks, which we're holding back the crypto space. And so, that begs a bigger question for me, which is, not whether they're benefiting from it or any of that kind of stuff or the ethical stuff, but look, crypto has a lot of challenges. There was a reason that there were chocks, on the wheels of crypto, right? Because, this is, it's an investment vehicle. Investment vehicles need to be governed properly, right? You've seen what's happened with cryptos in the past year. They had a rocket ride up to the top, and these last couple of weeks have been a real challenge. That's great, if you're a professional trader, but these things are becoming more democratized and more everyday people. And I can tell you that I know people specifically who you would not expect who are so heavily invested in this crypto space. Grown-ups. No, we're not talking about kids. And they are getting taken to the cleaners.
Yeah.
Because these are inappropriate. A lot of cases, they're inappropriate investments. The disclosures are not appropriate. And unfortunately, it opens up the door for a lot of, I think, mishandling. And that, you alluded to earlier, there are definitely some weird or questionable investments that are out there that are being pumped and dumped, creating great wealth for people with proximity. And, it's scary because they're not under the same investment scrutiny as you and I would be, right? I mean, there almost is no sort of legal, system, around. There's nothing governing what you can or can't do. It's very, very loose, the things that you can do.
Yeah, well, listen, and we'll talk about this another time as well. I mean, you have basically the unification of AI and cryptocurrency under the Trump administration. They've got an outside venture capitalist who is not confirmed by the Senate, who basically sits over. He's a minister with the portfolio of AI and cryptocurrency, reporting to effectively Donald Trump and Howard Lutnick and the Treasury Secretary. And they've put those two things together. And I don't think it's a coincidence. My problem is not that a Cantor Fitzgerald is making a lot of money in the areas of AI and cryptocurrency, because when you're a broker dealer, volatility is your friend, because you don't take equity positions. You make the money on the VIG, on the volatility and on the volume. Okay, I get that. And they've always been a broker, Cantor, the heart of the business. On the investment banking side, they are bringing a lot of companies to market. They're leading now, beating Goldman Sachs and some other companies in bringing companies through IPO, which is never unheard of in the history of Wall Street, that all of a sudden Cantor made it to the top ranks of IPO handling. So we got that going on. And then all of a sudden, my problem is not that they're in AI or in the data centers. My problem is that right after the sun meets the company that they're going to invest in, 2 seconds later, Howard Lutnick meets it. And they gave Joe Biden so much crap for getting on a phone call with, Hunter Biden's Burisma guys, in Ukraine, chit-chatting about the weather. And this is wholesale effective lobbying and proximity, selling, if you will, at the highest level in the White House, and nobody cares. But the reality is people do care. See, MAGA may not care, but the average voter cares that while they're suffering, back to the top of our truth bomb take today, while they're suffering and can't make ends meet, and the gas hose at the pump isn't reaching into their car tank, they're watching their president and those around him feather their own nest. And that is a problem. America will tolerate a lot of things, but a heartless president that doesn't care about them is not one of them.
Yeah, I mean, you bring up some very, very interesting points. I mean, look, it goes even beyond the president. I mean, even, you see how, many members, in Congress are, making money hand over fist in investments that you and I wish that we could have in our portfolios. And I'm a pro. I do this every day. Yep. Everyone likes to, talk about Nancy Pelosi's portfolio, but it's not just Nancy Pelosi. It's everybody in Congress. But look, the fact is, you were right and you hit the nail on the head. Average Americans don't like this, and they don't want to stand for this too long. The truth is no matter what the administration is, to see people getting this sort of proximity treatment, when everyone else is trying to make ends meet and they're taking money out of their 401ks so that they can afford to pay bills. They're struggling with all these issues. And they see people, dancing around the streets with, record quarters and, a lot of now, you could see disclosure of, House members of their portfolios. Look, this stuff, needs to be dealt with. And, it's honestly high time. And it's not just in Congress. It's not just in the executive's office. I mean, it's everywhere. I mean, it's in the Fed, right? You've seen it also. FOMC members have now, been brought up on sort of questionable, these ethics charges. And so, at some point, you can't fool everybody, no matter what your party is. At some point, Joe investor, Joe consumer is going to say, wait, I'm not having this anymore.
Yeah.
I can't watch. Because remember, wealth effect is so important now. And if they can't participate in that wealth, if they can't own homes and they're not seeing their homes go up, if they can't own stock and they're not seeing their portfolios going up 100%, they're not going to accept that too long, no matter who it is. And it's across the board. It's unfortunate, Michael. It's across the board.
Mark Malik, Wall Street Truth Bombs. He knows what he's talking about, everybody. And he works right in it. Chief Investment Officer of Siebert Financial. Good friend of mine going back to our high school or maybe even before days. And I wanted to bring him on for us to kind of talk, butt heads, lock horns, or come to some agreement when it comes to what we're watching with the Trump administration and Wall Street and Trumponomics. So glad to have you here, Mark. Love to have you.
Great to be here. I loved it.
Can't get your fill of Legal AF? Me neither. That's why we formed the Legal AF Substack. Every time we mention something in a hot take, whether it's a court filing or a oral argument, come over to the Substack. You'll find the court filing and the oral argument there, including a daily roundup that I do called, wait for it, Morning AF. What else? All the other contributors from Legal AF are there as well. We got some new reporting. We got interviews. We got ad-free versions of the podcast and hot takes. Where? Legal AF on Substack. Come over now to free subscribe.
All right, that was my conversation with Michael Popok on Legal AF, and I hope you found it as valuable as I did. Big congratulations again to the Legal AF team on hitting 1 million subs. That kind of growth, that doesn't happen by accident, my friends. If you enjoyed this crossover, make sure you're following Legal AF for smart legal analysis and Wall Street Truth Bombs for market clarity without the nonsense. Let me know what you thought of this format in the comments. More conversations like this are coming. Thank you for watching and thanks for supporting the channel. And I'll see you next time